Well, we're gonna get rolling this week, but I got to tell you right now, this one's today's gonna be short because we got a big report out tomorrow, and we'll be back tomorrow afternoon to highlight some things from the big acreage and stocks report we have coming out tomorrow at 11 o'clock Central Time. But there's just a few things we want to go through here today before that report comes out. We're not going to discuss the stocks at all in here right now. We'll do that tomorrow. We're going to really just look at this acreage report and what happened in March, what the trade is expecting, and where we're at. And we'd just like to go through this a little bit because, especially on spring wheat, our estimate is kind of out in left field a little bit, and want to tell you why we are where we have that number at. So here's the acres report in front of us from March. You had USDA put the corn acres at 91.1 and soybeans at 87.6 and wheat at 46.4. And then that spring wheat number, we have that included 11.7 million acres. And when we first looked at that number in March, to us, it just looked like the USDA was missing some total acres, and missing total acres. We thought it was probably 3 to 5 million acres. I mean, our bias was as total corn, beans, wheat acres should be somewhere in the 228 to 230 million acre range. And with this spring that we had and really active planting and dry weather, we've got to really shade that number, probably more towards the mid to the higher point of what we would have thought back in March. Now, when we look at the average trade estimate and what the trade is betting on heading into this report, they got corn acres at 93.8 million acres, up just shy of 3 million. Bean acres at 89 million acres, up almost 1.5 million acres. All wheat acres at 46 million, down slightly. And with that loss coming on the spring wheat side of it at 11.4 million acres. Now we're going to start with spring wheat first, and we have our estimate on spring wheat at 10.5 million acres, down more than 1 million since the March USDA report. And a big reason why we believe that has occurred is because of the drought in the northern plains and what we are hearing from producers. Yes, spring wheat might have been planted early, but with this extreme dryness in here, we heard from numbers of producers, especially through north central North Dakota, the heart of the spring wheat area, where soybeans were no-tilled into the spring wheat stubble because they felt there's a better chance to raise a yield on the bean crop. And the other thing is crop insurance paid much better on soybeans than it does on spring wheat. So therefore, from an economic perspective, the worst of the dry areas through North Dakota probably got more bean acres at the expense of spring wheat. We think the spring wheat acreage is going to be down sharply on tomorrow's report. And if there's a bullish bet, we think you'd go with that spring wheat side of it. Now, when we back up to corn and soybeans, we think that the corn acres are up even a little bit more. We have them at 94.5 million acres. We got bean acres at 89.5 and total wheat acres at 45. And when you add this all up, it comes up to 229 million acres. We're comfortable with that number right now, but do have to admit that total acres could increase another million, okay, because there's so few prevent plant. We think that acreage is going to be higher on corn and beans than what the trade really believes heading into this report. If there is a shock run an acreage number, I think this bean acre could actually even grow more than what we have in place. I mean, that's just kind of hunches and how we feel, but we are really confident that the spring wheat acreage has dropped off, and we are confident with that by what we are hearing from producers up through the northern plains. Now we're going to just take a quick look at the markets. Here's a December corn chart. I mean, over the last couple of months, we've settled into basically a $5 to we have 6.25 as a range. I mean, you can argue $5 is good support. We've got a double top at 6.25. It's going to take a major weather issue for us to get above 625. On the other hand, we probably got to get another week or two ahead and a little bit more of a negative acreage report for us to get a sustained move below $5. If that occurs. This chart, it just sticks out to us the potential talk of a double top. I mean, I don't want to be doom and gloom on corn, but that really sticks out when you look at the chart. As we visit with producers throughout the country, our thinking on corn is that we have 10 to 20% of the producers that we visit with that it's too dry, 10 to 20% that it's too wet, and there's a lot in between. We just think we're looking at an average corn crop in here right now. We're not comfortable really changing yield much from trend. As I get towards the bean side of it, we got a little more volatility on soybeans. We had the recent breakdown to 1250, and then we've got the high and maybe not quite the argument to the double top on soybean chart as we do on corn, but basically it did peak out, in that same area around 1450. The one advantage beans has over corn, though, is that the weather issues can really, give this market a spark over the next 4 to 6 weeks, where the weather rallying and corn is really narrowing up. Just like corn, though, this market will break out, and it's a big reason why we like budgeting dollars for puts, because if we got the downside breakout, we want to have the price protection in place. On the other hand, if we do explode higher in weather issues, it would be good to have some physical bushels to price out at a higher level. This is the bullish market here on Minneapolis wheat. And you can see today, though, it looks like we're putting in a little more of a bearish reversal. And after today's trade, you're going to have an argument maybe that 850 is going to stop this thing out. How far can we break back? 750, I think, is going to be a pretty good support area. Maybe into the 720 we could end up breaking to. But the thing with Minneapolis wheat is we probably just don't have any big sellers out there to really pressure this thing down. Supplies of spring wheat are going to be tight, but when you've had crop issues before, the market has tended to peak out in summer, then drift into the fall harvest time frame before we had a demand rationing rally in the winter months. My gut right now is if this corn and bean market doesn't make new highs, even though there's major crop issues with spring wheat, the crop ratings are the poorest in more than 30 years, it still may struggle to go above 850 in the near term. Now, when I get over to a weekly chart of Minneapolis wheat, as you can see in 2017, we went up to the 850 level and struggled to get above there. But if we do get a sustained move of 850 and we get some bullishness, whether it's from the report or a demand-led push in here right now, all the talk on Minneapolis wheat is that we're going to head to $10. Right now, when you look at this price in here on September Minneapolis wheat at the 810, 820 area, I mean, you can really argue 20 to 30 cents in either direction. But when I go back to the acreage side of it, I believe this market does have a lot of support underneath of it. It's just how much is priced in. And can wheat do it on its own without corn or soybeans moving higher? I think that's the big question there. Now we're going to wrap this thing up. It's all about the report here tomorrow. We're going to be volatile. There's just no doubt about it. The acreage numbers are going to be the first ones to watch. And then a little more detail, we'll have to get to the June 1st stocks figures, but that's not going to be the market moving aspect of the report. It is all about acreage. I think the other thing we got to discuss in here is the weather markets. How long can they last? Our thinking right now is this wheat weather market is essentially over with. Okay. I mean, we can only hype up declining crop ratings on spring wheat so much more. We can only kill the crop so much further. And when you look at the winter wheat side of it, they're harvesting. Okay. So we just think that this wheat weather market is maturing here right now. And today's trade is giving us that indication where we had the big drop in crop ratings. The market was high overnight, but then now failed during the session. I think a corn weather market's got another couple of weeks to it, where if we bring in some heat in here in mid-July, during the heart of pollination, we can add some more weather premium. If that heat doesn't show up in the forecast in the next couple of weeks, we're probably going to drift sideways to lower. This bean weather market, though, has got a little more shelf life to it. We see beans, getting the focus of weather at least for another 4 to 6 weeks. After that, it's going to come down to demand in world markets and where U.S. prices are compared to the rest of the world. We need to remember last year in the July timeframe, U.S. corn and U.S. beans were extremely cheap on the world market, and that led to the beginning of the demand-led rally. That is not the case right now, as U.S. corn and U.S. soybeans and even U.S. wheat are relatively high compared to the world competitors in here. It's a different situation and heading into July of 2021 than what we had in 2020 with a demand-led rally. we probably got ahead of ourselves a little bit talking about demand-led rally, with the reports right in front of us. But again, we just want to prepare you for what can be seen down the road. Any questions, drop us an email. Like I said, we'll look forward to being back here tomorrow after this report comes out. Thanks, and have a great day.